forward, I will be on these calls to do the live market session. And so I do want to dive into it as it is Wednesday, middle of the week, 9 a.m., which is around my favorite time to trade. There's a lot of activity going on in the markets right now, so we definitely want to see what's happening. I'm basically going to give a brief overview of what my morning routine looks like. Come in here, give analysis of news that I look at or maybe look for, and then I'll actually get into the actual technical side of trading and look at some charts, even share the setup that I gave to my private platform this week. And let's go ahead and get in here. So I'm going to share my screen, guys, and I'm going to start with sharing my Forex Factory page. So for those who do not know what Forex Factory is, or maybe you do, this is where I go to check all of my news, guys. Essentially what this is it's a news calendar that tells me, three things. I'll have a yellow folder, which is low impact. We'll have an orange folder, which is more medium impact, and then you have the red folder news, which is a little more high impact. So for me as a trader, guys, it's really important to know when we're going to get a lot of news, if the market's going to be volatile, or if there's not going to be a lot of news releases. Me personally, I do not do a lot of deep diving into the actual news that comes out in these folders. For me, it's more about seeing, hey, what pairs am I looking at, number one. Number two, which one of these news folders is in alignment with the pair that I'm trading. So for example, if we look at today, Wednesday, August 30th, we can see that we had some red folder news. So if you were looking at a Euro USD or a Euro CAD or a Euro GBP or anything with Euro in it, you may have saw some volatility in the market. For me, currently this week, and I'll share with you guys, I am not looking at any Euro setups. So for me, that red news really wasn't anything that I feel like I needed to actually look at or be on standby for. But you can see that we had red folders, 3 a.m. I was asleep, guys. I'm more of a New York session trader. I do not trade London, hardly ever trade Asian session. My sweet spot is definitely New York. But you can see at 8:15 we had USD red folder, guys, which is the ADP non-farm employment change. So just to touch on this from a high level overview, this week is NFP week, guys. So usually it's like end of the month, the last week of the end of the month, going into the first week of the beginning of the new month. You'll see a little bit more of manipulation due to these news events in the market. So you do want to be wary of that when you're trading. I make most of my money the second, third, fourth week of the month. First week, I have a different set of risk parameters that I like to follow, but that doesn't mean there's not opportunity, right? Every single week, there is a setup using my strategy in the market. I'm not a scalper. I am an intraday, somewhat of a swing trader. I don't hold them as long, but I do have swing projections. So knowing this news is important for me. So at 8:15 we had red folder. Our next red folder is CNY 930, which for me and the pairs that I'm getting ready to break down for you guys isn't really relevant for me. If this said USD or GBP, I'd be a little more inclined since that's what I'm looking at right now. But as you can see, news is slowing down in regards to the high impact news. But if we take a glance into tomorrow, we will see some 8:30 red folder news. So guys, we're actually going to see movement in our USD pairs, especially because it's NFP week. New traders, you're going to hear other traders say, it's NFP week. It's NFP week. Don't put, excuse me, too much emphasis on that. Just understand that news does a couple of things here. News either perpetuates the trend, either runs your stop losses or your resistance or your support level. But it's nothing to put too much emphasis on. We just want to be aware of it. So that's how I utilize news. But that is my morning routine, guys. Before I even get in the markets, there is a mental component that I go through, which is personal to me, that I think everybody should have. And mine is just a visualization. And then once I'm ready, I sit at my desk and I open up the news first. I'm not even worried about the charts at the moment. I just go right into the news and say, hey, where's the volatility potentially going to be at within my currency pairs? So that is how I utilize news when it comes to my trading. The next most important thing is the chart, right? We want to make sure that we're finding great opportunities and high probability opportunities in this market. So I always like to start with the DXY, guys. And for those who do not know my trading style, or for those who want to understand my trading style, I am a 4-hour trader, guys, with a 1-hour entry skill set. So what I do is I analyze from the 4 hour, I get the bigger picture, and then on the 1 hour, that allows me to get multiple scale and entries. So if you take a look at the DXY right now, you can see that we were clearly just in this uptrend, right? We have this series of new highs and higher lows. And what I do, guys, at the beginning of every single week is I go down each one of my pairs and I put this little note on my screen, and you can see that it says need more data. It either rejects this low, which is my last line of defense, right? This is the push that created this new higher high. In order for the market to maintain this bullish structure, we had to reject this level, right? So at this point, when I wrote this note, we didn't have all of this new price action here. So I said, need more data. We either reject the low and go higher, meaning we either reject this low and go higher, or we break the 4 hour last line of defense, and now we look to shift directions into a bearish market. So this is exactly what I was waiting for on the dollar index. And let me emphasize why the dollar index is so important to me, guys. When I can get a clear direction and understanding of where the dollar index is going, it makes trading a lot easier, because for those who don't know, there's things called correlations in this market. So the dollar index correlates with it can positively correlate, or it can negatively correlate. If it positively correlates, it will move in the same direction as USD CAD, USD Swiss franc, anything USD XXX. It has a negative, meaning an inverse correlation, meaning it moves opposite of your GBP USD, your Euro USD, your AUD USD, your NZD USD. So guys, if I look at the DXY and I know that it is starting to shift into a bearish market, right? We're starting to take out this 4 hour last line of defense. This is the level I needed to see hold in order for the DXY to maintain its bullish momentum. Well, what this tells me now is that my GBP USD, my Euro USD, all of those pairs are probably pushing upwards, since we're watching the DXY fall. Remember, it's a negative correlation. So I don't necessarily actually place trades on the DXY, but all I do is I utilize it to build an edge in the market, because essentially that's what we want to do. We want to find ways to build our edges in the market. So for me, DXY was my first glance always. I love to open up with the dollar index. I think, it just gives you a clear, concise direction, and it makes everything else easier. So try to, insert that into your repertoire. I think it's really beneficial, but I'm not looking to do anything with this. Again, I'm just looking for this to add to my edge. So this is the DXY. We're breaking through. Now we do have an hour and 50 minutes until this 4 hour candlestick closes. And that is why I'm a 4 hour, analysis trader with a 1 hour time frame, because I don't have to stare at this candle for an hour and 50 minutes. When I see that it's maybe 10 more minutes, 5 more minutes left of this 4 hour candlestick, then I'll come back and look, because what can happen here is price can go ahead and push past this level while the candlestick is open, but it can also at the end of the candlestick close snatch back up with a bullish candle, and we actually do end up holding this level. So I don't want that to happen. So I'm going to continue to wait. If an hour and 50 minutes is what I need to do to wait to get the data that I'm demanding. Notice, guys, I need more data. I'm fully aware that I don't know what's going to happen at this point in time until I get this particular set of data. Then I'll move accordingly. But right now, we still have an hour and 49 minutes left of this candlestick. The next thing I do want to call out is this gold setup. So, I wanted this to pull back a little bit more. I do think that there's potential for a pullback to occur, but this is a trade that I did call out for my students last week. I'll drop down into the 1 hour, guys. And, for those who don't know my trading style, I am looking for either the first thing, guys, after I check the news, the first thing I do is I check for either a new high in the market or a new low. And remember how we saw that the DXY is pushing bearish, right? We're breaking that key level. This is gold. So this is an XAU USD pair, which means this is negatively correlated. So this means that if the DXY is pushing down, gold is going to push up. And that's exactly what we're seeing. So we did see that we got this new high in the market, right? We closed above the previous higher high, which was here. I called this out for my team, and you can see this just exploded. This was an absolutely beautiful setup, but I'm going to continue to stalk this trend. So at this point in time, we can see that price is still pushing up. That doesn't necessarily mean that price won't come back to give us another entry. Price can dance like this at this high before pushing down to give us our optimal entry. So at this point in time, guys, I think that gold does have a potential pullback in play. It does not mean that this is guaranteed, guys. One thing I want to call out when I'm doing my live market sessions, and I do this for my students, is that the market does not move when we expect it to move. It moves on its own time. It moves when it wants to push. Like, that is completely out of our control. The only things that we have control over in this market is demanding the data, which means we need the data to make decisions. The second thing is entering the market. And the third thing is exiting the market. Those are the things I actually have control over, which it's not a lot in this market, right? These candlesticks, they'll do what they want to do, but all we can do is build our edge. And, don't overly convince yourself that you're right. Just be open to any possibility, right? The moment you start to become very detached from the outcome when it comes to live trading in the market, you're going to be a very successful trader. All of this analysis stuff is cool, guys, but psychology is really going to make the difference in your trading. If you are not focusing on your psychology and you see yourself making the same mistakes over and over, it's not that you need more education or more technicals or more patterns. It's the fact that you need to dial in on your psychology and kind of look inwards and say, what are my habits? And write your own book of truths for you in the market. For me, trading, Sundays isn't a good thing for me. Trading JPY pairs is not a good thing for me. And I had to learn that through journaling. So while I love that this is creating new highs, I have to be open to the possibility that this might not ever come back to this previous higher high, this structure level that was broken, to give me this entry. This could just continue to push from here, but for me, guys, I need to see a pullback. So this is high on my radar. You can see I have these little red flags on the pairs that I absolutely think have potential. But if it does not come back, I do not chase. I have things that I absolutely demand, and a pullback is one of them. I don't do, shallow pullbacks. I really like to see my market come in here and pull back, just how we saw on this movement right in here. I like to see the market pull back. So while I am open to the market pushing, I do think that we can see another pullback. I will be on top of this. This is something to look out for as well. Mark this off. I know a lot of people love trading gold. It will pull back when it's ready, but at this moment in time, it is not ready to pull back. So this is still a setup that's a little premature, right? We're not ready to buy yet. We need to see the market come in against our momentum. Give me an entry so that I can optimize my risk, right? So I can have a tighter stop loss for a greater reward. And, and it's just a waiting game from here. I wish I kind of got on here a little bit earlier, like if I was able to Monday. I had some jury duty that I had to handle, but there were some beautiful setups that happened earlier in the week that I'll break down just so you guys can, see really quickly. But I would mark off gold, see if we can get a pullback, and then we can look to take this higher. A lot of people ask about targets. Over time, my viewpoint on targets has definitely changed. So I used to aim for specific targets, but then I realized that the market's going to run when the market wants to run, and you never know how much you're going to get out of this market. So for my trading style, I let my winners run now. That's what I'm doing actually in my trade right now. It's kind of a new technique I'm putting in. But if you're a newer trader just trying to get comfortable with what it actually feels like to take profit off the table and put profit into your account, you don't need to let your winners run. You can close short, right? You can take the profit off the table. If you're like, hey, $500, that's cool with me. That's more than I make going to my job and so forth. Take the money and put it in your account and add to your account. More advanced traders, just to give you guys quick background, I'm 5 years into this. So I now have this relationship with the market where there's like a technical aspect, a psychological aspect, and an intuitive aspect. All right. So I kind of know when to let this thing run and when to not let it run. So do wait for a pullback if we get one. If we do not, no big deal. The market's always moving. This is a 24-hour market, open 5 days, basically almost 6 days a week with half of Sunday. So you're going to get plays. You're going to get setups. Don't chase. This is not something I want to buy, because if I buy here, guys, if I put my entry in here, this means I have all of this room to pull back. That's not what I'm looking for, guys. I'm looking for this to pull back so I can place a stop loss here versus place a stop loss here. So just be wary of that. But nonetheless, I think we have some good things coming in the market. I'm going to take my EMA off. This is the trade setup I'm currently in still. I'm getting ready to close my profits. You can see, guys, that I'll take this fib off. Fib is little advanced for the market session, but you can see that we were playing within this structure right in here. I had this as my TP1, and you can see if I drop down, and I definitely got into the lower time frames on this specific entry. I didn't call this one out to my team, guys. When I call out market analysis, and they're not signals, I don't say buy here, sell here. That's not the proper way to trade, and that's not the proper way to teach you to trade. I will give you an analysis, but it has to be, the highest probability. This one was a little more aggressive. This wasn't a 4 hour into 1 hour trade. This was more of like a 1 hour into 30 minutes. But the same, techniques apply. I'm identifying new highs and new lows. So we can see on this 30-minute, I had this new high here that broke above this previous structure. I allowed for price to give me a legitimate pullback. We pulled back into this level. I ended up placing a buy here. My stop loss is tight here. And you can see, guys, this thing just ran. Price pushed up here as well, and I scaled in here for a second entry. So I would have called this out if this was a little earlier in the week, and I was on the live session, but this is the trade that I'm currently in. I am getting ready to close here soon, take my profits, and call it a good week and go to my trading journal and reflect. So let's go to GBP. This is a trade that I'm currently in as well. You can see we'll go to the daily on this one. You can see that on the daily time frame, I am definitely creating a new series of higher highs. And guys, because it is the last week of the month, because it is almost the first week of the month, right? Well, September 1st is Friday, so we're going into the beginning of the month this Friday. I understand that from trading 5 years, guys, that these are weeks in the market where you usually need a little more data. Price is always in these points where it's either a little bit choppy, consolidating, or it's not in the point where I can take the most optimal entry. So I have to be extremely choosy at this point in time. But the beautiful thing is I can locate where I'm at on the chart. I can say, hey, okay, this is gearing up. Now all I have to do is wait. And as easy as it sounds, it's difficult for a lot of people. Waiting will get you paid in this market. All right, trusting yourself and patience will get you paid in the market. So on the daily time frame, you can see that we have a higher high, right, which means we closed higher than the previous higher high. So I know I'm in this pullback right here. We do not have anything magical to say how far this pullback is gonna pull back. We can say things like could pull back into this structure or this structure or this structure, right? People use demand and things like that. But the truth is, guys, we do not know how far this market is going to pull back. So because I am in this pullback, this means that I can go focus on what I say relevant price action. So now that I have the big picture, I can focus on what price is doing right at this moment so that I can catch trades week in and week out. So as you see, I'll go ahead and drop down into my, my 1 hour time frame. And you can see that we were just creating a new series of lower lows and lower highs because we should be, right? This is a daily bearish pullback. I should absolutely be seeing lower lows and lower highs. And I'll go ahead and stalk this market with you. So I'll make this yellow so you guys can see. We had this beautiful new low, and then we just kept acting off this level, not breaking above. There's no momentum that's taking me back to the high side like this, which means I got to keep my bias as bearish at the moment. So overall, again, higher time frame is bullish, but currently relevant price is bearish. So that's what you see here. I'll drop down a little bit lower. I am already in this trade with it at break even, but we can see, guys, that this is a new lower low. I have this red line to indicate, hey, price cannot trade back above this level in order to maintain my sells. So I'm not looking to hit a crazy home run here. I'm just looking to get back to this low ideally. And so price pushed. We pulled back. We tried to create this first level of resistance with this wick. We reacted, and then we couldn't break this level, which means we're probably going to bounce, right? We're going to bounce back to this level. Guys, when you're in a pullback, you're always going to have established resistance or established support. If you're in a sell, I am always looking to sell at resistance levels, which means price action is hitting a ceiling. If I'm in a buy, I'm always looking to buy off of support, which means price is looking to bounce off of the floor. At this point in time, I didn't see this. I got up, early this morning and saw this action right in here. I did take a sell, right on this bullish bearish close, guys. That is one of my signatures. I call it just establishing resistance, right? We came back within this wick and established some more resistance. And this is about taking high probability setups with low risk. So at this point in time, guys, I entered here. I have my stop loss is much tighter, is a 36 pip stop loss, and I'm looking to make 80 pips back to this low. So I'm currently break even though, because once I get away from my entry a little bit, I like to allow price to dance, and I don't want to stress myself. So what's the easiest way to protect my mindset and not stress myself? Is to go risk free, right? Which means I go break even and I don't worry about you know, getting stopped out now. So if I do see another opportunity play out, I'm able to take it because I now have opened up my risk again, right? If I'm only risking 1% of my account and now I'm break even, I actually have no risk on the table, which means I can take a new trade. So this gives me the potential for 2 trades that play out if there's another setup. So at this point in time, guys, you know, if we don't push back to this low, we could come back in here and push down farther. So you just continue to wait. If you see price come back in here and reject, meaning give you a bullish bearish candlestick pattern again, then you take that entry and you keep your low risk. It's not concrete, guys. This does not make the market 100% every single time. Again, we don't have control of this particular thing, so we just want to allow it to dance and find, you know, great optimal ways to minimize our risk, minimize, you know, losing money in the account, and just finding great setups that are going to build the equity in the account. So personally for me, you know, I could go through all of those other pairs, but, you know, if I just click one, you're going to see that this is one I called out for my team. I won't go over it just because it's so far gone, but you'll see that on something like this. Let me zoom out and see my note. Need more data, right? So again, we're in that time of the month where I need a lot of data usually. It happens every time. It's like second, third week of the month, we just trend beautifully. But when it comes to this end of the week, first week of the month, I always just need more data. And you'll see that the market has these patterns. But this is my note for me. I don't make it any more difficult. I don't try to force it and try to see things. I just say need more data at key 4-hour level, which was here. And you can see we're starting to break above. So as long as I get new highs, and maybe eventually I can scale in. But right now, this was the winner of the week. This one is just pushing. I would love to see some sort of pullback. If we don't get it, no worries. And then this one right here is the next trade that I'm in. I don't think, you know, it's necessarily off the table. We could run back to this level and reject. If we do, you know, look out for the sells. But every other pair, guys, you know, choppy, sideways. I always tell my students, if you are straining to read the chart, if you are straining to see what price is doing, then it's probably not readable. Number one, it's going sideways. It's not a clear structure. Based on how I trade, based on what I teach my students and the strategy of just this really easy confirmation list, it's not going to be hard to see. You're going to see it with ease. So again, if it's too hard to read, it is probably not a good setup. Trust me when I tell you, after 5 years of doing this, there is only about 2 good setups in here that I'm waiting for. The rest are just sideways, and you know, I'll be here every week doing market sessions, so I can't wait to watch this thing kind of evolve, right? We get to hop in at the beginning of the month, talk about, hey, how we need more data, and then the second, third, fourth week, we're going to be trending, and I get to actually put you guys into more positions to take some trades with me and succeed. But for right now, you know, the best takeaway here is to absolutely just utilize your patience. And make sure that you're staying within your disciplines. And if you're in this market trading without disciplines and without a trading plan, without a trading journal, then you need to throttle back. You need to pull off a little bit, and you need to make sure that you have a clear set of disciplines that you're gonna, you know, follow when you're in this market, because you can't remember everything. So write them down, you know, put them on a sticky note, print them out, and have them by you. It's going to keep you within what you're going to do in the market, right? We don't want to do anything. We don't want to force anything. And that's the hard part. And I'll wrap this up with this right here, is that when you're in these waiting phases, this is when people start to do things that are really out of their box, right? We try to force a setup here, or we get, you know, FOMO. We feel like we're missing the analysis and the setups and the movements. Your goal as a trader is not to chase every market movement, because it's always moving. Your goal as a trader is to find the highest probability with the lowest risk. And when you're in a waiting game like this, sometimes that's what's gonna happen is you're gonna see the market still moving, but you're gonna be like, well, how am I in this, you know, needing more data. Well, again, the market's always going to move, but we got to get in at the best entries possible. So just something to take away with, if you don't have a trading plan, here's the homework, here's the takeaway. Go develop a trading plan, especially while the market looks like this. It's not the cleanest right now. So if it's not the cleanest, go do something that works on your disciplines. I just read a book called The Best Loser Wins. That's a great book to read. I've put all my students onto it as well. So take advantage. And guys, with that being said, I will be back on market session tomorrow with Surge again at 11 a.m. So definitely tune in. We're getting closer to NFP, so maybe we'll have a little more data to work with. But for right now, I think this is a great opportunity to work on your disciplines and your psychology. So, much love and blessings to everybody. Go practice, go be great. And